This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. All right, taking a look at our top stories. Shares of stock trading app Robinhood trading down about 5% in its stock market debut Thursday afternoon. The company has significant crypto ambitions, with 17% of its overall revenue coming from crypto transactions in the first quarter of the year. Meanwhile, a bipartisan infrastructure bill in the United States Congress proposes to raise $28 billion from crypto investors by applying new information reporting requirements to exchanges and other parties. According to a draft copy of the bill shared with CoinDesk, any broker that transfers any digital assets would need to file a return under a modified information reporting regime. And finally, a number of diversity initiatives in crypto on the way. The New York State Department of Financial Services is seeking to promote diversity, equity, and inclusion in the banking and financial industries as strategic policy. Superintendent Linda Lacewell tweeting, "Let's turn our words into action. Hashtag diversity and inclusion. Hashtag banking, cryptocurrency. Hashtag fintech." Meanwhile, Consensus and the Black Women in Blockchain Council are also teaming up to train 500,000 Black female developers by 2030. Let's take a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading just under $40,000 right now at 39,523. Bitcoin slightly down about 2.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin is on an 8-day winning streak, taking the price from 30,000 to above 40,000 over the past 8 days. If Bitcoin ends a 9th day in the green, it would be BTC's longest winning streak since October of 2015. And I know Bitcoin is a 24-hour market, but for our purposes, end of day is midnight tonight, Thursday, coordinated universal time. Bitcoin is now retesting the 40,000 resistance level and appears overbought on the relative strength index, which could trigger profit taking. Quantum economics technical analyst Imran Yusuf telling CoinDesk on Bitcoin's daily chart, price action is playing out as the right shoulder of a head and shoulders top formation, which is typically bearish. Other analysts say the steady rise in Bitcoin is a clear sign that institutional investors are gradually scaling into their long-term positions, but more interest is needed from corporate America in order for Bitcoin's rally to continue. And joining me now to discuss Bitcoin and more is Quantum Economics CEO and founder, Maddie Greenspan. Welcome to the show, Maddie. So we saw this monster run up over the week of Bitcoin, but it still seems stuck in this $30,000 to $40,000 trading range. What's your analysis?
Yeah, I think that the way that it's come up from that 30,000 all the way up to the 40,000 range, I'm not sure if you can see my screen here with the charts, but basically it's come up extremely quickly. Here's the 30,000 to 40,000 range. There's the $20,000, which is ultimate support. That's the previous all-time high. And then we've got a couple of moving averages where we can see that famous death cross that we spoke about a few weeks ago. Didn't seem to have much of an impact on the price overall. The fact that it's come up this far, this fast, is an extremely bullish sign, but obviously there's a big test at 40,000 that it would require a lot of pressure to break the top of that range.
So any sign of a breakout from these summer doldrums?
Yeah, exactly. We'll see. And one of the things that is exciting here is the fact that it came on very strong volumes. Here we can see Masari's data, which shows a total volume of 16 billion. Hi. Yeah. And that's the first time we've seen this type of high volume since the good days, I would say, right? Those May 19th liquidation event, that was the all-time highest volumes ever, and now some pretty high volumes as well just the other day. And even more exciting is the on-chain volumes, which we can see here. This is Monday, where we had the big price surge. And then even in the last 24 to 48 hours, we had a lot of on-chain activity, several blocks with several dozen, I would say, transactions of hundreds of millions of dollars all at once. So we don't know if that indicates, retail excitement, or if that's really just kind of more of brokers reorganizing their the way that their books or anything like that. We don't really have much of an indication on that, but it is exciting to see those volumes back up in the air where they belong.
Maddie, got to hand it to you. You're the work from home dad extraordinaire. Thank you for that. But we're also seeing large transactions on the Bitcoin blockchain from yesterday. Any data and information on that? And I know you said you couldn't tell if it's from retail or institutional, but what do we know about? Are they large holders?
We don't know very much, actually, Christine. It's that's one of the wonderful thing about blockchain is it's extremely anonymous. I have heard that there's a lot of outflows from exchanges, but that could also indicate that people are getting ready to hodl. But of course, that's going to be a lot of conjecture at this point, and it's not very easy to verify those type of things.
Mm-hmm. All right, so we're seeing a lot of trading volume, a lot of people getting in on the action. Switching topics, so the Fed made some comments yesterday. They're keeping rates near zero. Consumer prices are rising. Nevertheless, Fed Chair Jerome Powell maintains that inflation is transitory. What are your thoughts on how those comments may impact the crypto markets?
Yeah, I thought it was quite interesting, the Fed's U-turn basically on inflation, right? So they've been touting all throughout the pandemic that inflation is transitory. I'm going to show you a few charts here that's going to blow your mind. Here we can see the M1 supply of money and what happened to it in 2020. Basically, that's money that's been injected directly by the central bank. And then they say, that all of the money that they've printed is only going to cause a transitory inflation. What does transitory mean? Who the flip knows? Actually, we can see Google data for people searching for the word transitory. The official definition is temporary. But yesterday, after the Fed's wildest predictions were blown out of the water. Basically, they were saying, we want to hold inflation at 2% or something like that. And actually, inflation came out closer to 5.5%, the highest inflation stats we've seen since the 2008 crisis, and nearly the highest we've seen in many decades. And they're saying that it's going to be transitory. And yesterday, they actually confirmed what transitory means in a very weird way, saying that, no, we don't mean that the prices are actually going to go back down, but rather the effect of the inflation process, that inflation is only going to be high for a short amount of time, and then the inflation rate is going to come down over time. But, to me, looking at this graph, we see huge amounts of money pumped into the system, and it's only going up from here. It's actually not going down yet. They're printing $120 billion on a monthly basis, and they really have no excuse for that. The entire financial world is grasping their heads, going, "Why in the world are they printing this money?" They've achieved all their goals. The economy is on track. The stock market is at record highs, and a lot of this money is going right into the stock market. Everybody in the system who needs liquidity, has easy access to it. There really is no reason for them to be printing that 120 billion per month. And they're now just starting to say, okay, well, we're going to start easing out of that. We're going to start tapering it down, reducing the amount of money that we're printing on a monthly basis, maybe starting December or something like that. And then once we've reduced the amount significantly, then we'll start raising interest rates, which they call liftoff. And obviously, here in the crypto market, we have a very different term for what liftoff really means.
And so by that narrative, Bitcoin is often said to be a hedge against inflation. Do you see that playing out at all?
Absolutely not. I don't think that Bitcoin is really a hedge against inflation so much as it is a life raft for many people out there who are scared of monetary debasement and who live in countries where their money is being debased. The United States hasn't really gotten a taste of that like some other countries. But a hedge against inflation, in my mind, is something that kind of holds its value as the money goes down in value. Since fiat money is, as we know, designed to go down and depreciate over time. And when they're printing it like it's going out of style, obviously that's going to accelerate the process. So calling Bitcoin a hedge against inflation, in my opinion, would be largely underselling its qualities. It's a lot more than that.
And at the same time, Congress is debating a $1 trillion infrastructure package. And that has implications for crypto, as they are seeking people who own crypto to pay up in taxes. They're seeking 28 million in revenue or so.
Yeah, they hope they can get 28. It's an estimate, I believe. So
right. 28 billion.
I have to say, I have to give it to Congress that, aside from the central bank printing, we also have to monitor Congress's spending. And I mean, they were talking about a year ago about, $6 trillion package. That the package that's going through the House at the moment is more like $500 billion, $550 billion. So I got to hand it to them, at least in that they're not going way out of style. But in a large sense, they've desensitized us to the money printing, right? Come out with a big number, 6 trillion, and then start with $500 billion and then go up to 3 trillion from there, and people go, oh, that's not as bad as we thought, right? So what you're referring to is a specific tweak in that plan that was really introduced at the last moment. Just a second. I get him into the toy room.
Patty.
Good. And
you gotta do what you gotta
do. What it means, I wouldn't worry about this for hodlers, right? So what they're talking about here is basically putting a transaction tax on crypto companies, so the on and off ramps. And what that can end up doing is consolidating those on and off ramps. So that's actually pretty good for Coinbase stock, because it makes it more difficult for competitors to get into the market. Now, Coinbase is already a publicly listed company, and they have bombastic revenues, so we don't really anticipate that they'd have much trouble facilitating this new tax. But other companies that are, maybe just getting started might have a much more difficult time to meet those kind of demands. To me, this just points to, and this is what I covered in my QE newsletter today, the fact that America has lost their sense of pioneering. They've lost their sense of leading the way. And it's quite sad in my mind that they're actually stealing from the future of the infrastructure of the Web 3.0 in order to fund things like an Amtrak backlog, right? Which is like really old technology that should have been probably at least privatized by now, but $66 billion, so about half of that that's going towards Amtrak and revitalizing the railroad industry.
At the same time, we got U.S. GDP figures. Yeah, no worries. Maddie, at the same time, we saw U.S. GDP figures out rising 6.5% over the last quarter, which is well below expectations. So even with all this money printing, this stimulus, it appears that the economy isn't taking off as much, perhaps, as expected.
Yeah, we've seen cracks in the economy recently. The 6.5% GDP isn't that bad. I mean, it's pretty large when you consider the whole history of GDP. I mean, we haven't seen figures like that in a very long time, and it's certainly not common. But I think it's also a factor of getting back on track after COVID-19. Here we can see that analysts' expectations from Forex Factory was about 8.5%. So 2% miss on that is pretty good. But what really concerns me here is the total collapse in the housing market, where we can see pending home sales were expected to tick up and actually tick down. New home sales came out the other day. Also, analysts were expecting them to go up, and they're actually not. People aren't buying real estate as much as they were, let's say, in the thralls of the recent bull run fueled by that incredible, insatiable appetite for investments that gave rise to Robinhood and all that. So,
speaking in a large of which, part, I mean, your comments. Yeah. Your comments on Robinhood, I'm taking a look at, their debut, $36.06 trading right now. It's down 5.1%. Your thoughts on Robinhood going forward? Yeah, no worries. Oh, hello. That's adorable.
Yeah. So, I mean, Robinhood got off to a rough start, no doubt. And that's never a very good sign, but obviously, it's a very early days in their trading. Actually, it's the first day in their trading, so we're not gonna judge them too harshly on that. I mean, this is the daily candlestick for Robinhood, right? First day, obviously, but we can zoom into, let's say, a 5-minute chart and say that they got off to that, but they did have a V-shaped recovery, right? And that's not so bad, and they even reclaimed their initial price. So. I thought it was kind of funny that FinTwit, Twitter, FinTech Twitter, and even Wall Street Bets, they were totally trashing this stock. Nobody wants a piece of it, even though Robinhood is the chosen venue for meme stocks. It certainly hasn't become one itself, and nobody really wants to treat it like that. Still fresh in our minds, the time that they halted trading on GameStop and screwed over all of their clients. But people haven't really gone away from Robinhood since that. And their valuation or expected valuation is somewhat doubled from that time until now, and that they are able to hold that. And of course, when we think about Robinhood, they're really going to the heart. At least what they're saying and what they want to do is to be the only app that people use for money on their smartphone. Now, obviously, that's a very ambitious goal. Is it possible? Are they going to be able to achieve that? I don't think so. But it's interesting to note that they want to be more than just, the go-to trading platform, but rather they're looking at the entire fintech space as prime real estate for displacement. And certainly we've noticed that in the blockchain industry as well.
All right, Maddie, we're going to wrap it up there, but thank you so much for joining us, as well as thank you for your little assistant joining us at the end of the show there. Thanks for holding up. All right, that was Maddie Greenspan, CEO and founder of Quantum Economics. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.